Ladies and gentlemen of the crypto space, we're live on a Monday, February 14th at 11:26 a.m. We are on time and on target. We're going to hit some good topics. We're going to understand this macro environment, and the biggest word in this macro environment is complete uncertainty. And it's all driven by the psyops and all these psychological games that are going on with regard to monetary policy talk and our Federal Reserve overlords. They're going to raise rates. Are they going to do an entire percent? 100 basis points, or equity market's going to collapse. Is there war breaking out in Europe? Oh my God, how do you peer through the madness? And that's exactly why we started the stream those couple of years back, to peer through the madness and figure out rational actions to take in these insane markets. The vast majority cannot navigate these markets. And the better, when you have a capacity to do due diligence and really understand the psychology at play, it gives you that edge. It gives you that rule book. It gives you that logic and methodology to navigate these markets in a decent way. So, title of the stream is Two Hot Crypto Assets. Whoa! Are there hot assets in these markets? Of course not. No damn well I'm going to be talking about stablecoins today. But bear in mind, that's where a huge amount of money is going to be made in these stablecoin protocols because they tie into the macroeconomic landscape. And it's a narrative I've been trying to drive home since December of 2021. A short month or so ago. But it's an evolving narrative. It's what are the most profound and powerful technologies emerging in the crypto space? And certainly, it's the CDP stablecoin because it ties into exactly what the eurodollar is. And we talk about macro because the only way to really understand the true potential of these financial tools that are being created in the crypto space is in the context of legacy or traditional financial structures. So CDP stablecoins are an extension of the architecture of the eurodollar, where collateral is taken in and a synthetic dollar is created, and it's done digitally now with a complete uh, uh, permissionless capacity to transmit and receive these assets globally, bypassing all of legacy banking infrastructure, the legacy banking rails. And that changes everything. It's an extraordinary thing for capital creation, frictionless capital creation. You don't need to ask permission. You just do it. You don't need an underwriter. You don't need a risk assessment. You either have the collateral or you don't. And if your collateral loses value, it gets liquidated mathematically. It's not permissioned. Going to get a mortgage for a house, it's an entire process. You get a HELOC, home equity line of credit, you get a personal loan. It's all based on subjective evaluation of your relative risk factor. All that frickin' matters is if you have money, then you want to borrow money, you process the collateral and you manage the margin call, and that's how you do it. And that's why Aave is a big deal, and the money markets of the crypto space are a massive deal, particularly with regard to permissionlessness. But the CDP stablecoin protocols, I think, are massive. So while the point of me crafting this title was to talk about stuff like my MAI, which is the Chi stablecoin, as well as Frax, which is the Frax. So it's the Frax stablecoin, but it's FXS. So anyway, so that's the governance assets. How do I say that better? Anyway, but Frax and Mai are some of the most interesting stablecoins from a metric standpoint, and obviously MIM is still on the radar. From a technology standpoint, everything they built is still functional and unquestionable in that regard, aside from the insane psychological considerations we must react to and navigate optimally to avoid capital loss with regard to its governance asset. So obviously the fallout there has been immense, and we've adjusted our portfolio as best as possible. And I wouldn't go so far as saying exiting positions, even in this macro climate, is warranted. So what have I been doing? I've been adjusting. You adjust for the uncertainty, you adjust for the risk, you adjust for the realities of the situation on the ground. And, we could go over a little bit of the portfolio balance. I posted obviously on the Discord forum for everyone to digest and see what I'm doing. So right now, sitting on about 31 and change percent stablecoins. and any swap has been trimmed to about 10% of the portfolio. Frax and convex are locked, which is interesting. If they weren't locked, I'd probably trim convex a bit. Strongest sentiment with regard to Frax because it aligns with the stablecoin narrative that I talk about. It's not necessarily a CDP, but I'm very interested to seeing how FPI functions as a protocol. We get a full rundown of how of its design and in behavioral intent and functional intent for that matter. Spell is still part of the portfolio at 4.7%. Obviously, I have that locked in a streaming position. I don't have full access to that for another couple of months. And I don't know if I'd go any lower. Maybe 3%. Maybe 2-3% of the portfolio. But I expect further volatility. I expect appreciation. If you expect appreciation and you receive appreciation, you're doing better. So I tell you guys all the time, 1% to 10% changes everything. So I have these larger position allocations because obviously I've experienced navigating these markets. But in times like these, clearly with my increasing stablecoin percentage, I'm falling back to my core beliefs. And those core beliefs are you don't need assets. You want more dollars, whether they're actual dollars or synthetic dollars. It doesn't frickin' matter, in my opinion, where synthetic dollars are actually profitable. So I have 30% of the portfolio in stablecoins cranking out a fair amount of yield. We'll take a look at that real quick. I'll show you guys a little bit of transparency. So in Phantom, I have that. On Polygon, I have the vast majority of everything at this point. This is my finance, and it's cranking out 14.62%. I'm not going to complain. It's a couple $100 a day. And there's nothing to be underappreciative of in a world where folks are expecting 50% return on their capital. I think that's a little bit entitled. And there's nothing wrong with double-digit percent yields on frickin' stablecoins. Folks have too high an expectation. The expectation that crypto is the road to salvation was never the case. Crypto was always about having a capacity to access systems that historically were inaccessible. Capacity to provide liquidity to forex markets, which we've been talking about literally since early 2020. Disintermediated systems where you can access return on capital allocated to systems that you can never access. Imagine calling your bank saying you want to give $1 million worth of USD and $1 million worth of euros, and you want to charge 0.1% on the transaction fees. It doesn't exist, but you could do that without permission in the crypto space, and that's extraordinary. So people have to fall back on the reality of what the system always was. It wasn't for gambling, it wasn't for speculation, it was for reimagination of systems that the general public has access to that they never had access to. So we work and we save and we allocate and we grow our money and we try and outpace inflation in a rat race, of which it overwhelmingly is. Such a rat race. So any fell back to its trend line, which is good to see. It's above the purple box. I'm actually quite surprised to see it in this price action zone of congestion. So that's nice to see. My reduced position, I think I said, was 9.75%. And I feel comfortable with it. It doesn't have an inflationary pressure, so that's refreshing and reassuring. Frax as well, it's deflationary, so that's even more so reassuring. And convex as well is disinflationary, with its rate of inflation tied to the quantity of curve that it's able to ingest. So disinflation, check. Deflation, check. Neutral, zero inflation, check. So my primary positions, which account for not the stable coins 20, 30, 37, 40, about 45% of the portfolio are in monetary policy favorable assets. And Spell is still obviously in road to zero emissions. They're still doing everything they're doing. Merlin and Squirrel are still doing what they're doing. So the the directionality of the software platform, the software stack is still in play. So that's not a non-favorable or a non-palatable environment for capital. The psychological factors and the social media trends are clearly depreciative. That's applying depreciative pressure. But from a monetary policy standpoint, it's still a decent asset to have um, an allocation to. If you're worried about depreciation, that's how you manage that with position size, ladies and gentlemen. We've talked about that a lot over the years. Manage risk with position size. Let's hit some comments. We're going to look at the other charts that I have up. You guys know the drill. Morning, Noah. Hey, Dan. I'm ready. Wable stump, my man. This is the rational space. This is where you're going to get to a capacity to peer through the madness, ladies and gentlemen. Dex is loaded, ready to buy those two alts. Noah's about to show. Dan, Frax, and May. For Christ's sake, someone tell me how to pronounce that stablecoin. MAI and Frax and UST and MIM. These are all meaningful assets, but I never really exposed myself to the Terra ecosystem. It is what it is. I'm very interested in the Polkadot parachains. You have Astar and you have Moonbeam, which is picking up. So this was an interesting asset. I threw a couple $1,000s in here. One Beam is a stablecoin, slippage minimized swap protocol. It has all the overtones of it's all stablecoins. So I found that who knows how the tokenomics. Clearly, the tokenomics are highly hyperinflationary. This has lock mechanisms that remind me of Ellipsis over on Binance Smart Chain, and whether it plays out well, who knows? So I just threw a couple bucks, and I was printing like $1,500 a day with like only a couple $1,000s deployed. Clearly, at 7,800% returns, it's at 5 cents. It was up at 7 cents. It was down at 2 cents. This is in the cent phase. This is a type of position where you take a 0.1% of your portfolio and you see what happens. You check back in a year or two. So I'm probably just going to keep locking this shit. As people are in here scavenging the yield, I frankly own 25% of all the locked beams. So talk about ownership of the protocol, 25% of the entire protocol. We'll see how that plays out. But Moonbeam and Astar are on the radar, and all the stuff that's going on in the Cosmos hubs, and obviously everything on Elrond and Cardano's picking up, and this is very interesting. And we'll see what protocols emerge. So you have all the hype associated with protocols. I could care less about hype. I'm not a person that wants to buy before the herd and just to dump on the herd. I want to see capital flow. I want to see velocity. I want to see money creation using historic double entry accounting methods of analysis. And when I see that, that's where I expect economic activity, capital churn, transaction fees, and that's the stuff that I want to capitalize on. Transaction fees. I want revenue streams that are sustainable. So what is proven to be very sustainable revenue? Yield on stablecoins, baby. Folks out there chasing way too much appreciation, and often leads to disaster. Look what happened with Blizz and Geist. It was an absolute shit show because they offered the yield, but they failed on the tokenomic standpoint. I'll be a Geist that's been holding up relatively well. Go figure. Whereas Blizz has completely failed. So something about that. Maybe it was too much yield, and it just drove everyone to psychologically want to just get rid of the asset and pillage the price point. Mix is in the house. Always a pleasure. Sammy, hello, my friend. Killis, Adrian, Raul, prophetic poet, peer through the madness. Yeah, I mean, is this the most insane market you've ever seen? Costco's in the house. Crypto bets, mix, hit the likes, peeps. 50 people in the stream. 16 likes. We can do better. Hey, Cap, enjoying the show. Happy V-Day. What do you think about Geist purchase of 1.5 million CVX as boosties, bribes, go, multi-chain? Very cool. Good for them. I have no interest in the Geist asset, and I'll be liquidating it when these locks release. But you know what I like about that? They're trying to figure out how to maintain relevance. So they're going to be purchasing CVX and locking it, which is nice because CVX. It's a disinflationary asset, and it produces significant revenue. I mean, it's like 30 grand a month it's printing right about now for my position, and I'm okay. I'm comfortable with it, and I like the monetary policy. I think it'll hold up quite well in this kind of environment. I couldn't, you know, what's nice about a position that has a lock? You can't liquidate it if you wanted to. Um, Talman in your eyes, has the curve play changed due to recent price action in today's CDX confirmation bias farming actions? CDX FX test a better play? Well, better play is not necessarily, it's a subjective opinion. Curve's cool. You know, we all love Curve. It's a money printer. It fits all the properties of an MMT currency producer. And the price point's been holding up. It's within this purple box. In my opinion, this purple box is a significant region. Expect volatility. So clearly within this purple box, you can see it rip down to $2. You know, below the $2 price point, you probably are in a bit of uncharted territory with regard to what price action you could expect. I mean, there's no reason it can't rip to a buck and a quarter, buck 20, buck 25, and try and put in a lower low and try and hit previous support. There's meaningful support down here between $1 and $1.20. And that would still be bullish from a long-term perspective. And frankly, that would be very bullish because that is a previous resistance flipped support held as support. So you have short-term bullishness and bearishness that only is a small factor in assessing overall directionality on the longer time horizon. You know, if you go over to Bitcoin, you can see that most clearly. I'll show you guys what I mean about perspective that'll absolutely drive you nuts. Let's go over to the 1 month. If you draw one simple line, a horizontal line right about there, if we fall down to $19,582 and it bounces off the 200 SMA on the monthly, that's so damn bullish. The most bullish chart ever. If in a year from now we check back and it bounces off 19 and change, such a gorgeous chart. I mean, it literally bounced off a moving average and a previous resistance, flip support. That is tremendo bullishness. So we get screwed up with short time horizons and looking at things over short term. It's important to understand the short term because you can capitalize on short term directionality, especially directionality changes. But long term trends, secular trends, which is a hot topic on social media nowadays for folks trying to understand short time horizons versus long time horizons. They're so meaningful to really appreciate. And you can really look at it in a binary way, short term or long term. Yeah, it could really get a little discrete and break things down into midterm, long term stretch goals, which is how we talk about software development. But these time horizons, either you know, right about now, next couple of days, next couple of weeks, or what the hell is going to be around the next year or 5 years from now? Because if Bitcoin's going to crash to 20 grand and it's ridiculously bullish and it's going to be 100 grand in a year or two from now, you probably want to capitalize on the short term to expand the amount of exposure you have for the long term. And you know, there's an aspect of trading that's involved in that, but it's not really trading because trading it gives you the sense or the um, uh, kind of encourages the conversation about like day trading, intraday, and now you're getting into ultra short term time horizons. But you don't have to attack it at the ultra short term time horizon. Clearly, if you have a position or you have capital to deploy and you see it at 19,000 and you start seeing support, you start seeing like a bounce and then a double bottom, or you see that directionality reversal candle, where the Fed is in a shit show of a situation and they decide to cut rates, where QE starts to ramp up. That's when you buy Bitcoin at $19,000 because you have technical confluence with moving averages, you have a previous resistance, and you have the macro financial situation indicating that we could all start seeing a directional trend reversal to the upside. Hope that helps. Hope that helps. Thought Sun Tetra dumping spell. Clearly, he's adjusting his portfolio and realigning his interest and so on and so forth. Amit, thank you. I tried my best. Well, what's a call on convex? Let's take a look at the chart. We'll take a look at the chart. I'll give you some insights on the technical front. So it's nice to see a fair amount of price action congestion in this price region. And that's extraordinary. Clearly, all this shit that went on to the upside is irrational exuberance. What was this, the Moki shit that went down back in November of last year? But directionally, it's overwhelmingly bullish. You zoom out, here's your fork. We're riding the bottom bar of the fork. So there's nice, little bit of geometry going on. It'd be nice to see it bounce up to the first bar, down to the bottom bar, or maybe even down to here, flipping a previous resistance into support. But this is a lot of congestion. So there's a lot of folks in here. There's so much congestion that it entails that the persons that hold these assets, in large part, are at this price point. So for it to go down, people are taking losses. They bought higher than where they're going to end up selling it. And that's not necessarily the direction markets head. There was a huge amount of volume and activity in this purple box. So this is the type of asset, considering its monetary policy, where you take a punt, you lock it up. It's only 3 months at a time, 4 months, 16 weeks. Yeah. And you watch your position size. What's most important is you're able to sleep at night. So don't overextend yourself. 2%, 3%. If you feel more comfortable with the markets and have a longer term time horizon, 4, 5, 6, 7, 8%. What am I at with convex? 14%, 15%. I see great reason to have comfort in a 1 year, 2 year time horizon. And I'm not too worried about being exposed to further depreciation. It'll hit my overall balance sheet. It'll hit the overall portfolio current price size of the portfolio, and that's okay. I know where I was 2 years ago. I know where I was back in October, and all things considered, that is the most important thing. You assess where you are, where you want to be, and how much shit you're willing to wade through in order to continue to engage with these markets. That's probably the most important thing. I know so many folks that talk to me and they're like, why didn't you get out, cash out, get all in cash, get back to a bank account, run for safety, run for cover? No! I'm going to learn how to navigate these markets like a damn sailor in a storm. These are the markets to be in, and you learn how to navigate them because you're dealing with just so much cool technology. You're dealing with a large population, a large user base, and most people have no idea what they're doing, which is exactly what accounts for this extraordinary volatility. And I'm not here to capitalize on other people's losses, and that's clearly what a trade is. If you're selling at an appreciated price, you're capitalizing on someone else that's going to lose money as the price point goes down. I'm not here for that, but I understand that's the nature of capital markets. There's no way that's going away, and that's exactly why all these people lost money. They're trying to capitalize on someone else's losses. They thought it's going to go up, it's going to keep going up, and when it goes up, I'm going to sell at a high price point. And I'm going to leave all the people that bought before me holding the bag. Because that's what it is. That's what buy low, sell high methodology is. You were in early. Other people came in after you, and I'm going to sell, and they're going to hold my bags. Never forget the reality of these markets. The better you understand the realities of these markets, you realize it's filled with predators and scavengers, and then at least you know what you're up against. And the whales push markets around. You have to be able to be a little fish. You don't have to be a guppy. You could be a big tuna. A nice bluefin tuna. And you got a whole bunch of whales and sharks around you, but you're a decent sized tuna, so you can navigate the landmines and the predators and the scavengers. You navigate this shit. Figure it out. You want to own something? Own these markets. Learn these markets. Lives in the house, a pleasure. Amit, sir, tell us your macro thoughts. Well, we'll see what happens. We got that emergency meeting today. We got what PPI coming out, I think, tomorrow. Um, we'll see what happens as they try and control the narrative. In my opinion, they want to handle inflation, but if they handle inflation too aggressively, they're going to collapse business. And there's the whole argument that the banks are flush with cash, so they could start extending credit. And we'll see how well the zombie companies hold up in a tighter monetary policy environment. Um, because the zombie companies need access to fresh debt because they don't have enough income to really even service their debt. So if there's any contraction in their cash flow, their business, they get into solvency uh, issues. Um, and this is what Raul was talking about for a good part of 2020. Um, the solvency event where nobody could pay their shit. So what happened? The Fed dropped rates to like 0.000, and did what they did with transfer payments, so on and so forth, and kept the zombie companies alive without the implosion. So the solvency crisis was averted using interventionist methodologies. Um, Generally speaking, the best word to surmise the macro landscape is uncertainty. And it's unfortunately not organic uncertainty, it's artificial. We're waiting for decisions, subjective decisions of persons that will make a choice based on how they view the market. What is their opinion of the market? And we'll know answers to that sooner than later. But what do I know? I don't trust the general public. You can't trust people's psychology. Why? Because people are defensive and they're protective. Oh, they're afraid the market's going to keep going down. You're going to sell. I'm going to sell. You're going to sell. We're all going to sell. Because that's what people do. So the best position in that type of market is to be on the sidelines. So that's why we look for technical indicators like resistance, flip support, and then a fresh higher high, the trifecta of bullish confluence. And that is indicative of the psychology that's at play. That means there's market actors that are inclined to keep deploying capital because people before them were deploying capital and people after them are deploying capital, enough so to print such a uh, technical price action sequence of events. The break of previous moving average resistance, the the hold as support, resistance, flip support, and the higher high. Albeit we saw that recently fell because look, we had a break of previous resistance and the hold of support and the higher high, and that shit just failed. So basically, this was a head and shoulders. This was another head and shoulders. So we had a bigger head and shoulders followed by a smaller head and shoulders, and we retraced all the way to the purple box price zone of price action congestion. So we had another price action zone of congestion down here. I mean, you got one kind above here. This is definitely a price action zone of congestion. Take a peek. Boop, 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 boop. I mean, that's just obvious. It screams of congestion. And we'll see. We'll see. This is all irrational, irrational, irrational. Um, I trimmed the position size to feel most comfortable considering the macroeconomic climate. Sitting on 10%, as I mentioned. That's okay. It is what it is. If the market keeps going down, I'll trim the position until I feel comfortable. You have to feel comfortable with your positions. Expect positions to depreciate. Readjust position sizes so you're comfortable being allocated to a position. I know this is a position I want. I want exposure to this market when VE Multi goes online. That's it. I don't need a large position. If the market's going up and VE Multi's printing, you allocate more capital. But if the market's going down and it's losing money, you're protective. Take the capital out, allocate it to stablecoins, and crank out 15% returns on your money. The yield on stablecoins is crazy. How is one beam any different than Blizz Geist? I have no idea. Seems like the same end result may happen with the protocol. Yes, Dan, that's exactly the case. What's the only difference? It's on Polkadot, a Polkadot parachain, Moonbeam. So that is quite interesting. I have no idea. I mean, Geist held up significantly more than Blizz. Maybe secondary protocols come online on Polkadot. There's a lot of stuff going on. Akala's there, Astar's there, and there's other contract network. It's just an explosion of financial products and services that are coming online on Polkadot in the next 1, 2, 3, 4 years, especially on Cosmos as well. So it's very interesting. Opinions on Tomb. Interesting. It's not something that's ever been enough on my radar to spend too much time on it. Lois is in the house. How are you, my friend? Always a pleasure. It's taken me a while to finish my due diligence on Iron Bank. The only thing I don't know is inflationary, deflationary nature of the token. I welcome any of your thoughts. I own it at $80. I don't have an opinion on Iron Bank as in the asset. I look forward to it from a money market standpoint. That's ultimately what it is. You deploy capital, you're able to borrow against it, and what it could potentially mean from a solidly integration. Clearly, Iron Bank. It's an Andre closely related protocol, and access to liquidity can facilitate yield-bearing positions or leverage positions for capital speculators. This has all the overtones of like a GLP. GLP on GMX, you're able to provide liquidity, facilitating leverage trading, leveraged options, so on and so forth, and you can get pretty much outside returns on dollars. So I look forward to very much more structured products coming out that are very much up only. So GLP obviously has price action volatility, but if you have, and that's what a structured position is. If it's cranking out 100% return on the money, and you incorporate a short position to cover the downside that costs 30%, you still have a 70% return on the money, and you're protected to the downside. So that's the type of structured product I very much most look forward to seeing in the crypto space. And if you could get 70% on stablecoins with downside protection, damn. And basically, that capital flow is generated because you're facilitating degeneracy. You're facilitating options and leverage positions. So I'm very much interested in that and having exposure to that as long as it lasts before it gets diluted. Because what's the net result of a relatively new structured product, structured financial product that's highly lucrative? It gets used and capital flows in. Capital flows from underperforming to outperforming, from shit opportunity to incredible opportunity. And the destiny for protocols that are outperforming and offer great opportunity, great returns is dilution. And then you move on to another protocol. Or maybe you've made enough money by then that 5, 10, 50% return on your money, you're pretty cozy. That would be interesting. Felio's in the house. A pleasure. Kronos, Adrian. Hi, Noah. What are you parking your multi? I am not doing anything with it. Gilead like a sailor. Well, sailor, I like him. I like the way he comes at the market from an engineering perspective. He's referenced thermodynamics a fair amount, and I like the way he talks about the technology. Plenty of folks will criticize him to a great extent with regard to financials and so on and so forth, but he's done quite well. So I'm not, I don't have any bad opinion about the perspective he brings to the markets. I think he's spot on for a person of his wealth. And I think a person of his wealth with his time horizon of 100 years doesn't really give a shit about short term and a couple $1 billion. It doesn't mean much to him. He's got revenue streams. What you do with free excess capital is completely separate and apart from your overhead or a capacity to service your overhead. If you have a capacity to service your overhead, you know, you have unlimited potential of how you could deploy your savings. What market conditions would signal you that it's time to fully allocate back into the crypto markets? Yet not right now. The market is fragile as all hell. There's no such thing as all in. Never go all in, never spread too thin, never pull out entirely. The management and structure of a portfolio is a completely dynamic process. I mean, really, I don't, as of right now, my sentiment is very much heavyweight allocation to stablecoins. And I'm starting to think that going forward, the more I watch whale accounts, is the growth of these stablecoins. You're able to put stablecoins to work at a meaningful percentage, 10, 15, 20, 30%, and maybe even 40, 50, 60, 70% in 2020, depending what kind of structured products emerge. That's incredible. That changes everything. Um, and now the quest is really one thing is how you accumulate more synthetic dollars and how you outperform inflation. So you can have the whole philosophical and deep argument and deep conversation about the meaning of money and sound money. But in the end, you could use synthetic dollars to convert them to dollars, and you could live your life. And synthetic sound money is still extremely volatile, but dollars are dollars. It's a fixed unit account. You're able to interact with legacy financial products and services on a nominal level, and that's meaningful. So as long as you can outperform inflation, 20, 30, 40, 50%, uh, there's you're outperforming the burden associated with normal persons engaging with our inflationary fiat currency, um, and that's looking at it rationally. We don't have to look at the dollar with animosity. We could be have distaste in it because it's not fair or there's interventionism, but in the end, if you're making 20, 30% of your money, all right, fine, you're doing fine. And in the end, that's what we're here for. We're here for the technology. We're here for disintermediation, where you have access to systems that you historically didn't have access to. You're here for sound money. There's such a wonderful story with Bitcoin, and very much look forward to a fresh directionality shift. I look forward to a historic resistance, flipping support. I'd love to see it go down to 20 grand. That'd be a great entry and a great piece. And then you ride the appreciative cycle. I expect appreciation and then depreciation, and you're able to capitalize from a trading perspective. It's a meaningful asset. It doesn't mean you have to sit through and watch your entire portfolio evaporate to nothingness, dollar denominated. That doesn't make any sense. That's irrational. Killis, this space is an adventure amusement park. Undoubtedly. You know the deal by now. Harshal, good morning. Noah, Lewis, smash the like button, especially. You get good laughs from Noah on the stream. 69 people in the stream, 35 likes. We can do better. What did you go to college for? Electrical engineering. Never was an electrical engineer. I took 2 classes in Java primitives and collections and some random shit in college. But my entire career is Android. 2009, I wrote some apps on what was it, the Google? What was it called? The Google. It wasn't the Play Store back then. It was the App Store, the Google App Store, the Android market. It was the Android market back in the day. My God, it's been so long, and they were quite successful. Tens of thousands of users. And anyway, you get me all nostalgic. Not going to have a trip down memory lane live on stream. Raul, what bridge do you use to get the Moonbeam? Multi-chain is the leader of the pack, but to get the Moonbeam is only from Ethereum mainnet. Don't listen. If anyone's thinking about this shit, you're going to lose your money. I expect to lose everything that I put into here. Let me be very clear. I have no trust, no faith in this. I just threw some shit against the wall. So expect to lose all your money if you stake something, and that's it. That's the expectation. So I set the bar so low that all right, great. If it works, it works. But I expect to lose every single dollar that I put into the air. I expect it to be completely worthless. Are you playing the buy low and sell high, sell almost everything? Absolutely not. I have a very structured portfolio, as I show on Discord, and I tell you guys verbally 31% stablecoins, and that means I'm 69% assets. And my portfolio fluctuates dollar denominated, and but the last thing I am is black and white. I got shades of gray all over my portfolio, and it is not easy. So rear, it's not easy to have a well-structured portfolio that's dynamically managed, and it's what's your position size, what's your time horizon, and the only way you figure these things out is to tinker with the portfolio over years. So you're buying and selling and watch the damn slippage. You're going to get hammered on Ethereum mainnet, and that's why Phantom, Polygon, and Avalanche are so awesome nowadays. You don't get hammered on slippage over there. You don't get hammered on transaction fees, but you could easily get hammered on slippage. So watch the damn slippage. You guys can imagine how much slippage I took liquidating some of those multi positions, it was 5, 6, 7, 8% slippage. And if I liquidated a half a mil, there you go. It's 50 grand worth of slippage, just exiting some positions. So you have to really have conviction and understanding of the implications of what you're doing. And like I knew that's how much slippage I was going to incur, and I determined that it was more appropriate for me to have a larger stablecoin position at this time, considering the macroeconomic environment. It's not easy. It's not easy. You always preach on a pizza shop not playing the volatility games. Uh, you're thinking in black and white. And black and white is not the way to engage with any market. The pizza shop is a heck of a narrative. And I mean, look what I'm doing. I'm generating yield all over the place, and I have a convex position. But it doesn't mean I'm going to rationally hold a position while retail, the persons with absolutely no experience, sell the asset because they have no idea what they have. Um, so that's the deal. And in many regards, I still get tempted for a curve position. So I have all this cash that's sitting around, not deployed. Let's go back to CRV USDT. So I get tempted if curve hits some sort of low. I think it'd be nice to take a position, or maybe I just reallocate more to convex because convex does look strong, and these are pizza shops in many regards. I mean, come on, this thing is just cranking out returns. Let's go back and show. I'll show you guys. What is this? 15% returns? Come on, 14.64% returns on 1.6 mil. That's pretty cool. That's nothing to complain about. It's cranking out like $600 a day. That's a heck of a pizza shop. Quantified. Hey Noah, what exactly are you expecting from the FPI air job? Unknown. Unknown. I have unknown expectations for the behavior of the protocol, what it functionally does, what it means, and how it will behave, and how other protocols will view it. Maybe other protocols are like, oh my god, this is the coolest asset ever, and all of a sudden everything gets paired with FPI. I have no idea. But I have FCVX FXS locked and VEFXS locked. So I have no choice. And I sleep well because I'm very comfortable with the fact that it's a deflationary asset. And that's very reassuring. So I don't have to worry that the principal is going to like cut in half from here. I don't really think it's going to get cut in half from here. It's depreciated significantly. Icing and fluff was completely evicted from the system. But I have good sentiment and good feeling about the directionality and the way Sam communicates. And it's a lot of good vibes about it. So it gives me great comfort. And I got great comfort about the convex position. Look where they're expanding to. They're expanding to Frax, and they'll continue to expand, just like the other protocols are expanding on the other liquidity protocols. Well, Liquid Driver, um, Beethoven's very interesting, and uh, Tokamak on Ethereum, and all those types of protocols, those liquidity driver protocols. So it's very interesting. Has FPI airdrop snapshot been confirmed officially? Yes, on the 20th, I believe. If you search on Twitter for Sam's post, it's probably about the 20th, from what I recall from social media posting. 76 people in the stream, 39 likes. We did pretty good. I'll give you that, guys. Thank you very much. Monday, February 14th at 12:10 p.m. As always, thank you all for joining me. I wish you all a wonderful day. After party on Discord for the most rational community in the entire crypto space. Y'all have a good one now, and I'm going to see you again on Wednesday. Peace.